Hi guys, welcome to TCM Education. This is of course an over the weekend video, and we're gonna we analyzed already two stocks, one on the upside, SATS, that's EchoStar, one on the downside, HSAI, that's HESI, that we analyzed in the prior day as an amazing long. On Friday it was a nice short, and now we're coming back to probably the best provider since its IPO, CRCL. Now, why is it the best provider? You just need to look at the chart and understand immediately. Let's go then to that's the intraday chart. Let me see if the YTD chart is it shows. You won't be able to see the volumes in the chart because I'm trying to compress the view in order so you'll be able to see the list better. And this is of course the power list, because I got complained by people that the list is not coming through very well through YouTube for laptops, and it's coming through great on TV, and on some mobiles it's coming great as well. Others, I didn't get actually a feeling that there is a problem with mobiles. The problem is clearly with desktops. So that's why I'm kind of trying to fix things up. And again, you need to use the maximum resolution when we're looking. And again, the focus is only on a couple of columns. I think that by now you understood. So going back to the daily power list and the chart of Palantir and the daily chart, of course. Sorry, not Palantir, CRCL. And this is the IPO that we talked about. I don't know, maybe there are, I think that's the most, let's put it this way, desired videos that I made at least. Happy this talk is coming along. And it's a great day trading provider. The problem is that most of us, if not all of us, don't have shorts available. Those who do have shorts available and can take advantage, fine. I don't have shorts available on my platform for CRCL. But, and again, right now I'm focusing on doing these videos and less on day trading, and basically more on mentoring. So it's not like I'm taking the trade, but this is shameful because this stock has amazing moves. And it doesn't matter to us that the price is $100 per share or whatever, $25 per share or $500 per share, because we have our own strategy how to deal with that, assuming it's not very spready. And it's not, because we're trading only high volume 5 million and up type of stocks. And again, this stock is not trading at one penny spread. Okay, so that's it was a $300 stock just last Friday. Sorry, last Monday, Tuesday, Wednesday, Thursday, Friday. So Monday it peaked at $299. Since then some ugly stuff happened, but overall the perception is that when a stock is up so much, it 10x after the IPO. It's not like they came out with earnings and the earnings were fantastic. It's just still the IPO hype. I mean, the IPO hype can go 100%, 200%. This is 1,000%. It's totally unrealistic. Having said that, we've seen crazy stuff happening, but not in a real stock. We've seen crazy stuff happening with Newsmax, which has absolutely zero liquidity, or some Chinese stocks that were obviously a pump and dump. But this is not the case. This is, I hope, it's a legit company, and many US money managers, ETF, mutual funds. I mean, the smartest guys around and girls around put many millions to work at the IPO, which was, if you remember the story, anywhere between 28 and 30. Then it started to trade at whatever, 69 and 10x, and now it's moving down. So there's plenty of action, and this stock should be, if you can trade it short, should be on your watch list every day, and if you can trade it only long, it can be and should be on your watch list every day as well. So because the moves are the best, I think they are the best in terms of percentage intraday movement. Now this is not obviously easy to trade. It carries some risk, or let's put it this way, way more risk than an average stock, but the reward is unbelievable. Let's take a look at the chart, and everybody can do its own due diligence with regard to how and if and how much money to put to work in CRCL. So that's CRCL on Friday. Now take a look at this crazy, insane price action, which is not showing, of course, the pre-market. So the stock closes at 214 on Thursday, gaps up to 225, nearly 224 Friday morning, then closes the gap, pulls back to 210, breaks 210, goes to 200, goes through 190 with a beautiful bear flag formation, and drops at one point under 180. So overall it goes from the highs to the lows, the highs 224, lows 175. That's $50. $50, that's a lot of road to cover intraday. That's in one day. That's the amount of dollars that I think 90% of the stocks in the New York Stock Exchange and Nasdaq combined are not doing the whole since their IPO, and that's happening in 6.5 hours. Okay, but that's a joke, and now let's see what can you do. Obviously, this stock is a one-way street, which is a great thing. So even if you cannot trade it, and most of us, again, that's my assumption. I don't know if Robinhood carries shorts, if Momo carries shorts, if Schwab carries shorts, what's going on with dozens of others, brokers, and it's a mystery. Most likely, most day traders and retail traders won't have access to shorts on CRCL. Having said that, we can learn from this chart a lot. So what can we learn? First of all, let me add the view, at least the view up on the chart, and see if it is relevant. Why it's not adding? I don't know. Okay, here's the view up. Okay, so the view up is not a factor because the move lower is very aggressive. So what happens here is that it gaps up on, I guess, the pre-market volume, which is always very low volume, and then picks up a lot of volume and takes this $50 dive from the highs to the lows. Highs, like I said, 225 or 224. Lows are posted here on the chart at you can see them here at 175 and change. So again, if you're looking at the chart, I hope nobody is thinking, and let's say it is a real chart, and I don't think anybody has an idea to buy CRCL. It looks like a falling knife. Now, how can you act with this mega mover? What are the risks that you want to take on this on a trade? Let's put it this way: if you think you're going to risk 1% like the normal trades that we do, it's very tough. Okay, there is one place that where the 1% risk works, and that's this break of 190. If we look at the price section, you can see that the 190 break here, the risk to the upside is $1. Wow, this is 0.5%. Okay, so that's magical if you see and observe, and actually it's easy to observe because you see the consolidation of this very narrow range bars. You obviously can see the bid and the ask, and this is probably the best trade in the stock by far. So if you look at this potential entry short at 190, wow, this is really tough to draw. Well, so this is a channel where if you observe, and you should observe, a day trader can observe this channel between 190 and the drawing is not very accurate. Again, it's super tough to be accurate when the price is 190 and whatever it is. So let's call it 0.5% to 1% of risk, okay, including slippage, including everything. Keep in mind what I said before, that this is probably not shortable anyway, but let's say it is shortable. Obviously here you get an amazing risk reward on the trade, but that's happening only because of these super narrow range intraday 3-minute bars or 2-minute bars or 5-minute bars. I would suggest if you can trade the 2-minute bars, that's better. Now there is another potential entry at 200. Let me draw it for you, and you'll see that in that case at 200, 1% is not enough. So if you post a 1% stop loss, the stock goes up after breaking down. It goes up $2.40 or 35 cents. So you stop out if you have a stop loss, and you cannot trade this stock without a stop loss. If you trade this stock without a stop loss, one mistake and you're losing 5%, or you don't know. It's this one can go against you limitless. It's a $200 stock. That's not the issue. The issue is that it has so much volatility built into it. It can explode 2, 3, 5% against you and ruin your day easily. So you cannot afford to make any mistakes here. So in this case, I have to say, I'm sorry, it's a loss. So the strategy is not working. What can you do in this case is take more risk, don't take the trade, okay, or use better judgment. Now, what is better judgment? 2%, 3%, the VWAP? I will have to say that in this case, it's a losing trade, because there was a kind of almost a perfect $2 stop loss. So in this case, it's not working, and there are trades that are not working. Even though the pattern looks great, the stock is unbelievably weak. This is the case here, and there are losses. You cannot run away from losses, but this is a measured loss. So if your position is 100 shares, meaning $20,000, then you lost $200 and change. No big deal if you are a day trader, and if it is a big deal, lower your position to $10,000. If you feel comfortable, increase your position to $50,000, which is, I don't know, 250 shares here. So this is basically the trade of the week. This move lower, unsustainable in terms of risk, but plenty of action and lots of stuff to learn from this chart. Okay, we're done with this video. Thanks a lot for being here. Do share it with your friends, and we'll see you in the next one. Thank you.